Why do assets go through bull and bear markets? Bitcoin went from something like $63,000 today up to $70,000 in a day, and then came back down to $68,500 when I started recording. So this is common in a bear market, meaning a down market, where there are rallies. And so one of those rallies will eventually be the rally that gets us out of the bear market and really kicks off in earnest the last bull market, the new bull market. Now, technically, the bull market will start at the very low. So there's a chance that we are in a bull market, and the low was $60,000. James Check, my favorite Bitcoin analyst, still says there is a 60% chance that $60,000 was the low, meaning we already had the low, meaning we are already in a bull market. But obviously that means there's a 40% chance that we dip just below $60,000 at some point in the future and sort of reset the clock for where the bottom is, but nobody knows. Okay, so why do markets do this? And it's not unique to Bitcoin. All markets, which includes gold and silver and copper and corn and soybeans and rice and wheat, as well as major stocks like Amazon, Apple, Microsoft, Google, Nvidia, Facebook, all of those, they all behave the same way. They go through bull and bear markets. So why is that? Well, James Check would be the first to say things go through bear markets because immediately prior to the bear market, too many people bought too many things at too high a price. So in the case of Bitcoin, too many people bought too many coins at too high a price, and they did not have the ability to keep those down. So when they got on the natural roller coaster of the market, they ended up vomiting those coins or those shares into the marketplace. This works the same whether it's Bitcoin or shares of stock or anything like that. So what this looks like in the real world is something is going up. Everybody gets excited that it's going up. Everybody assumes it will keep going up. And so people start using more and more money to buy into the thing while it is going up. And it turns out that they are using money that they can't really afford. There's always some number of people that have to get washed out of the market, but that always is, a relatively small percent of the total people that hold the asset. But again, every asset goes through bull markets and bear markets for this reason, as well as because the underlying elements of whatever it is are changing. In the case of Bitcoin, Bitcoin's in the strongest position it's ever been. But in the ups and downs, it's just in a bear market for no good reason. Other times, stocks are in bear markets for very good reasons. But if something is in a bear or a bull market, really independent of the asset itself, which is what's happening with Bitcoin, again, it happens because too many people buy too much of the thing too fast, with money they can't afford, and they just can't keep it down.